most developers start way too late thinking about this. And I like to say, you don't just build buildings to build them, you build them to sell them or lease them. And so it's important to bring a marketing team in as soon as possible, truthfully. And I think there's not enough emphasis on actually developing a proper positioning for a project, proper messaging, proper branding, but then taking it from there and creating demand from that. Driving traffic, driving leads, driving appointments that convert to revenue.
Hey everyone, it's time for Design Development, your hub to learn direct from top professionals in real estate design, development, and construction. I'm your host, Rens Hayes, founding partner at H&O, lifelong learner, obsessed with high-powered organizations and the leaders that guide them. If this is your first time on the show, thank you so much for tuning in. And if you're a returning guest, can't thank you enough. Let's get to the show. Mike, thanks for joining us.
Psyched to be here, Rens, and you actually make me sound like I may have some sense about what I'm doing, but I'm.
Hey, we'll see. Big, tall task, right?
I am excited to be here, though, Rens.
Yeah. I want to start by providing some context for listeners that maybe don't know you. Can you tell us a little bit about Charles Gate today, who you serve, and what you're really about?
Yeah, so ultimately we're about, and our primary mission is to help people live better and help people invest better. And so we do that by creating a series of services around the housing industry. So like you mentioned on your intro there, it starts, one of our primary stools is the brokerage arm, which is helping people find homes to live in, sell homes they live in, or lease homes that they need for apartments. The second stool is our new development consulting and then sales and marketing for new developments. So we help developers find, underwrite, design buildings, design a sales and marketing program or a leasing program to help them sell out or lease up properties and developments faster. And then we have our property management arm, which is managing and operating properties in an ongoing fashion, whether it's multifamily or our HOAs for the homeowners in there. So those are the three major stools. We also have within each of those service lines a number of different service components, like even everything down to maintenance, janitorial, cleaning, snow removal, and different aspects of that. A really sort of good training program for our agents on the brokerage side. So there's a whole host of services that we believe is creating a very effective flywheel of services that could serve the entire life cycle that will help people live better and invest better in real estate.
Yeah, that's great. When I think of your company and the value you provide, your target market is new real estate developers or large property owners, right? And the services you provide are really hard to do at a small scale, right? They're hard to monetize. So when you're able to package all of those together in one service offering and do it at scale to multiple vendors, you're really freeing up your target market's time to do what they do best, which is either buy more properties, invest in new deals, figure out new developments. Is that right?
Yeah, that's exactly right. I mean, we like to think of ourselves as a secret weapon, especially on the development side, for investors to identify properties and investments, to underwrite those properties and investments, and to execute on that. And so we're freeing them up to do what they do best, which is build and develop housing, find and build financial structures on the asset management side, to bring in investors to their team, and we can take it and work with them to execute a project, and they can trust us to make sure it's done well. So it's less time on their team and far less stress, because they know we're going to deliver fantastic results.
Yeah, it makes a ton of sense. And I'm really fascinated by your multifamily lease up kind of focus. And I'm sure you have clients that have previously tried to do their own lease ups. So if there's other multifamily developers and owners out there, like, where do you separate yourself for somebody that thinks they can do what you do? What might you bring to the table that's a little bit different?
Yeah, I think we bring, so I believe that we have this really incredible platform that it has enabled us, and we've learned a lot. We've made obviously a lot of mistakes, a lot of problems we solved along the way as we've developed this marketing and lease-up platform. And fundamentally, what we're really doing is bringing a bigger strategy, which I can get into in a second, to the marketing side. And then we're also tying that directly to our leasing team in a really sort of tightly aligned way that can help accelerate lease-ups for much lower cost than can be traditionally done. And so
time is money.
Time is money for sure. So, I mean, even just, whether it's accelerating a lease up, getting a stabilization faster, getting more units pre-leased, all of these things can substantially impact the returns that developers see. And so what we've done, though, is also taken our learning from the 40, 50 projects that we've worked on, whereas, even the biggest and developers aren't really doing that many projects in any given period of time. So we've got a lot more experience from a lot wider array of properties, and we could take those lessons and learnings back and continue to iterate on our process over and over and over again to make it better and better and faster and more cost effective to help us deliver those results.
And what's not to love there? So we're going to come back and do a deeper dive into that part of your business and how you saw that opportunity. I wanted to talk about the Inc. 5,000 fastest growing company. That's got to feel good, right? Could you share what kind of metrics go into achieving that accolade?
So we're super thrilled and super excited about it. We're actually have been 2 times Inc. 5,000 company, which is great, and hopefully many more times as well. Obviously, it's based on revenue growth. How they do it, the metric that they measure is 3-year revenue growth as a percentage. And so, their Inc. 5,000 measures the top 5,000 fastest growing private companies in America. And we've been, like I said, sort of honored by that 2 times. And generally speaking, you've got companies all over the map from usually on the low end, it's, 50% growth up to, it's absurd numbers for some companies, but,
it's impressive growth.
It is. So we've been pretty typically in the sort of 70% growth range to achieve those Inc. 5,000 awards.
70% growth year over year.
Over 3 years. Over 3 years.
Okay. Either way, 70% growth over 3 years is still phenomenal. I love that. I want to go back. The design development is really about telling your story, helping other people kind of see similarities in their story to yours. Maybe they're trying to build the next Charles Gate. Maybe you don't want them as competition, but we're going to help tell the story and provide advice so we can all learn from you. You have a partner at Charles Gate, PT Vineberg. You guys started in 2003. How did you guys meet? How did this come to be?
Yeah, so we met actually in college through a mutual friend of one of my really good friends growing up. Happened to be his roommate in college. I was at Boston University. He was at Boston College, and we had just met through this mutual friend of ours. And as it turned out, PT had gotten into the real estate business. Basically just leasing apartments to college students primarily. And what happened for me is I was playing hockey, but I ended up getting injured and had to stop playing. So I was, basically pulling my hair out, going from what is essentially a full-time job playing Division I sports to, nothing. And I was struggling just, thinking about what I was going to do. I couldn't sit around playing video games all day. That was going to drive me bonkers. So PT had said, hey, you should get into real estate. This is a great business, a great job. It's a flexible schedule to work around, and you can make good money, and you're helping people out, and it's just a fun job also. So I'm like, yeah, all right, that sounds great. And I was always thinking I was just going to go into, a Wall Street type job since I was an economics major. And so, but I entered the business. I started working with PT at this small shop in Brighton, and just kind of fell in love with it from there. Really, that was my foray into the business. We worked for that firm for a few years, and then after college, pretty immediately after college, PT actually founded Charles Gate first, and I sort of joined maybe a month into the company's existence, actually. So
1 month in.
Yeah, something like that. Yeah,
that's
exactly.
pretty good.
Yeah,
so. He'll just say he's the founder, right? Yeah,
that's right. 1 month. That's right. That's right. So then, but yeah, that's my kind of foray into real estate and with Charles Gate.
And so you were proactive. One, I love that you played D1 hockey at BU. That's respectable. But 2, did you start selling real estate while at college?
Yeah, exactly. So, and by the way, I was not that good of a hockey player. I gave a good effort, I guess is what it was. But I had a lot of fun. It was a great experience. And to answer your question about real estate, so we started essentially started mostly with leasing apartments. But yeah, we were into sales and leasing. But at that firm we were at, but it's pretty much, I'd say probably 90% of the business was a leasing business. Which, by the way, I recommend for anyone getting into the real estate or real estate brokerage industry to start with leasing, because it gives you such a perspective on the income side of the business and how to, where ultimately all of the, value is derived from a property on the income side, and how to, lease up, how to market properties in an effective way. And it's a great way just to do a lot of deals, meet a lot of people, and get some good perspective on the industry. But that's how I started, really, is just mostly leasing, started to do a few sales and kind of grew it from there.
That's great advice. And I imagine, jumping on that, the suggestion to go towards a leasing role, I imagine you see a lot more volume there too than if you just tried to go straight to sales, right?
So that's right. So there's a lot more volume in terms of your interactions with people and clients, and how to deal with people, how to understand what it means to, deliver I like to call it a hospitality experience for people, to make them feel special, and make them, understand that what you're doing is helping them, and how you're doing these things for them. So, but yeah, you get so many more swings at bat, so to speak.
You need the reps.
Yeah, exactly. More reps. And so it's a really great way to do it. And also just for longevity, a lot of those, renters eventually turn into buyers and sellers as well.
And so, as found Charles Gate, seemed like it was within the first year, maybe in a few months of when you graduated. Is that right?
Yeah, it is. So we started very young. Yeah. So I had stuck around. I got my master's degree in economics at BU, but it was, I believe, for PT too. He might have been out of college a year. I can't remember. It was pretty much right after both of us finished college. We were too dumb to know any better and sort of jumped head first.
I was going to say, was there any hesitancy to go into business together at that age? Did you see it as a big risk, or?
So I think there's two ways to answer that. The first one is, I kind of already alluded to. No, we didn't even think about, or at least I will speak for myself. I didn't even think about risk at that point in terms of that. And I didn't think it was a big risk. Obviously you have no family, you have no real major income needs. You have no, you have nothing to support. It was a fairly low cost business to start. It wasn't a major investment. So I didn't perceive it as a big risk. And the second thing is, I had done, some internships. I had some other jobs in offices and buildings, and, had done the interview circuit. And just the more and more I was doing that type of stuff, I just realized I was an entrepreneur at heart, and I just couldn't go work for someone else. And so that's between those two things. I think it would have been a bigger risk to go get a job.
Yeah, there's a good lesson. I would agree with you there on like getting a job. When you position yourself correctly and you kind of build that vision, a job can be more risky, right? Especially the undiscussed thing in the U.S. culture is no one really understands how financially viable the companies are that they work for, right? It's kind of ignorant bliss.
Yeah, that's true.
You just trust that it is.
Yeah, absolutely. Especially for small business, really any size business. You see, these extremely well-funded startups like imploding all the time. You see small businesses struggling. So yeah, a lot of people don't realize how tenuous, really operating almost any business is at any given time.
And we see, obviously, you guys are building the company the right way. You're trying to create that safe environment for your team, and we try to carry ourselves the same way. JP Morgan did a study, and this gave me some insight and my own thoughts on like why the U.S. government created all the stimulus money when they shut down the economy, a forced shutdown. It was 50% of companies had 12 grand in the bank and only 28 days of operating cash. That is terrifying. Right? Wow. Terrifying. Half the companies. JP Morgan.
That's incredible.
And so if you think about that 1 to 2 month forced shutdown with no money, like half the businesses in the country are on the brink of bankruptcy. Like they need the money to keep going because that'll keep people employed. And if you don't, so it was by no means an easy problem. And I just look at that data as my own intuition. I didn't hear that anywhere else other than that data, but.
Yeah, no, I had not heard that before that. And by the way, I believe it, but that's an incredible stat when you say it like that. Wow, that's incredible.
It was a big number.
I would say, I think, what has always been my motivation in terms of running and growing the company has not been, because I'm trying to derive more shareholder value necessarily. I think that's a byproduct, but primarily what I really enjoy is sort of building and growing, people and careers and opportunities for more of my team. And I think that's really, really my sort of intrinsic and fundamental motivation in terms of doing this. I mean, I think, especially these days, it seems like a lot easier in some cases to, try to build a solo consulting business or, these types of solopreneur, consulting business. But, I don't know if I derive as much value for myself intrinsically, not judging anyone else, but for myself, I really find it to be extremely rewarding when I'm seeing people, come into a business, grow, learn, and you develop, careers for people, more income opportunities, delivering great service to clients. And that's the type of stuff that's really exciting. And I think ultimately that's got to be the foundation of any successful business.
We share that passion. I love that about you. And you had some great advice there before we got derailed on some stats about starting the business. You kind of looked at it, de-risking the typical perceived risk of going off on your own by recognizing I don't have a family. I don't have any like these responsibilities in life that build that mountain of risk. I'm young. I'm in my 20s. I already have a confidence that I can do lease-ups and make sales happen. It's the two of us, like, let's go for it. I think I thought similarly back in my 20s when I was going into it. My goal, I wanted to make sure I launched a business before I had kids was one of the thoughts. And same exact risk assessment. So early days, you're obviously an integrated real estate firm today. I imagine that didn't happen the day you launched. You started as a traditional brokerage. Could you tell us about some of the challenges you faced as you tried to build that traditional brokerage?
Yeah. So we did start as a brokerage. I think my thinking at the time was, I think I was sort of 20 years too early, but you sort of hear about this evolution of what's going on in the brokerage business, and is there any value delivered by realtors anymore, or is there any is the service worthwhile, or is it going to be automated and outsourced to robots and all this stuff? And that stuff was really starting to creep up, I'd say, in the late 90s and early 2000s. And wow. And so I was like, okay, so we're going to go with this team-based model at the time, and really try to sort of, coming from the sports world as well, I still do actually believe in the importance of teams, but we thought, look, there's going to be much more focus on growing this team concept. And so that's how we kind of started, is really trying to build a team of real estate professionals that all have sort of different specialties. You might people that only focus on buyers, only people that might focus on sellers, maybe people that only focus on leasing, maybe your marketing team members who are doing the marketing for those other folks. And so that's kind of how we sort of our initial kind of progression through the real estate brokerage, the brokerage side. I'm sorry. Mm-hmm. And as we're doing that and gaining some pretty good traction with it, then we came into the 2008 kind of meltdown. And so, funny story there is we had just leased up a brand new, bigger office. We were growing pretty fast, and all of a sudden, we're in 2008, just renovated or just built out this brand new office space. Yep. That was like 4 or 5 times what we had before. And then, next thing you know, the whole world melts down. So we're like, oh boy, okay. So how do we adjust, adapt, and move forward here? And, I think we learned a lot of lessons during that time. And one of those things coming out of that was we really need to diversify as well in terms of other types of business and within the real estate space. So that's when we really started to think about property management, and we really started to think about, how can we take advantage of what is going to happen in the new development space as the economy sort of improves. It took a little bit longer than I think we thought, but as the economy improves, there's going to be more development happening, and how can we be in a position to take advantage of that? So those are a couple of things we learned out of that. But that's where we started, and that was, I would say, we're growing really well, really quickly, and then sort of the meltdown happened, so we had to adjust, adapt, and learn some new lessons there to help us in the next 10 years.
You nailed that segue so well, I didn't even have to ask the question. It was the brokerage to the 2008 meltdown. The key takeaway I'd want to point out there is you faced adversity, and it's really made your future even brighter than it might have been had you never faced that adversity, right? So like the 2008 recession, the meltdown, you recognize this point of weakness in your business. Brokerage is a great business, but it can be market dependent. So how do we shore up the value of the business and create a more stable entity moving forward? So that can't happen again. We can't end up in that. And as you just said, you launched and you looked at property management and other avenues to expand there.
Yeah, that's exactly right. I mean, that was our big takeaway from the 2008 meltdown, and how, I mean, well, other than surviving it at first, and we had to make, certainly some adjustments and adapt, and I'm really proud that we actually didn't have to lay off any of our employees at the time. We really
That's amazing. How many employees did you have going in?
We didn't have, it's a good question. I'd have to go back. We didn't have that many. It was like so we had a number of agents who were 1099 subcontractors, and we had maybe about 10 employees or so at the time.
So 10 employees plus commissioned agents.
Plus all the agents, yeah, something like that, yeah. Yep. And I don't, I'm not sure I have to go back and look, but it's something around those kind of numbers. But we really, I know I can remember consciously making that decision at the time. And this is in 2008, there weren't things like the PPP protection and that type of stuff that happened most recently with COVID. But we made that conscious effort to say, hey, we really want to be in position. We're going to sort of make that investment in the business to make sure our people are protected essentially. And also put us in position coming out of that to do some creative and innovative work and take advantage of opportunities coming out of the recession as well.
And how long in the greater Boston, which is typically a pretty resilient real estate market, if you consider the whole nation, probably the world, right? 2008 recession hits. Did you feel that immediately in 2008? Did it kind of lag, or were you one of the leading indicators?
Well, so So I think as we got into 2007, 2008, we sort of felt the real estate market being pretty frothy, and that downturn happened to be basically created by the real estate market.
Sure.
The financial essentially fraud of the mortgages happening, things like that. So, and it got
very unique to that recession, right? They're not typically triggered by real estate. That one was triggered by real estate.
Exactly. And so, and we can talk about this sort of current, maybe upcoming recession, but yeah, exactly right. So it was getting frothy, right? So you kind of could figure, but still at the time, no one believed, real estate isn't gonna crash or decline. And the truth of the matter is, it didn't really crash around here in the Boston kind of area, with the exception of some pockets where there was a lot of foreclosures happening. Most of the market stabilized, although transaction volumes went way down, which obviously impacts our, on the brokerage side revenue more than sort of prices going up or down. Geez, I forgot what I was going to say there, Rens.
Okay, no problem. So if I dive into, moving forward through that recession, about when did you start to see a change in your business, and like at what time? Was it a kind of a 2-year kind of lull, like maintain, and then what was your first move on the upside coming out of the recession?
Yeah, that's right. So that actually reminded me what I was just about to say, which was saying, I remember in 2008 when we were watching on the TV in the office, like the C-SPAN hearings about whether or not the stimulus package was going to be enacted or things like that, and we're like, sort of like, please make this happen type of thing, to because we don't know how long this is going to go for. But fundamentally, I think coming out of that, we were in pretty tight constraints economically for really through the end of 08, 09, 10, and really into 11, until we started seeing, okay, maybe things are starting to pick up again and start to move again, and the market's getting a bit unfrozen. But it did take, I would say, a good 2.5, 3 years out of that to start to feel that the market is moving again.
Okay. And then so the path to the integrated, you had this idea, you saw the exposure in your current business model as just being a brokerage, and you wanted to build on these other revenue models that kind of created more stability. When did you start looking into multifamily lease-ups, and when did you start looking into, let's say, the homeowners association or the property management, which I want to do the property management after, because there's even more to that story that I think is pretty cool.
Yeah, totally. So we started the new development business essentially, I think it was 2012, 11 or 12. And we started that actually as a separate brand. So we started that then. We started building the foundation. How are we thinking about marketing? How are we, building a platform that can do effective marketing to bring condos to market in a way that is unique from other companies? And this is going back a number of years now. So, the bulk of the marketing was really, really traditional at that point, newspaper ads and print stuff and all of these things that were way traditional and probably 10 years out of date at that time, never mind today. So, yeah, correct. All of that stuff. So we knew there was a better way to do it. And we had developed our marketing sort of tools, techniques, platform going in. And then it was just, really kind of pounding the pavement and meeting potential clients, getting the first one under our belt, and then really kind of building our reputation from there. We knocked it out of the park. Basically, our first project, which was in Brighton, 55-unit condo project in Brighton, that basically was one of the first, if not the first, condo projects coming out of the ground after the recession. And so we just we crushed it on that one and built up a reputation from there by doing things definitely way more uniquely, way more digital focused ways to really create the demand around a product and bring people into it versus and being able to track it with analytics and understanding what's actually happening versus placing an ad or putting a listing in MLS and hope someone sees it.
So if I understand this correctly, the flaw you saw in the market was really outdated marketing efforts. So you weren't generating enough demand for the multifamily lease up. And if we share the challenge, what's the challenge that real estate developers face? They're building a 55 unit, 100 unit, or 250 units above. What's the challenge they're really facing as they come towards like opening and close? Like, what are they trying to accomplish?
I think even today, the challenge. Well, today it's less about people don't know about these newer tactics and opportunities. But today, what's lacking in a lot of ways is just a strategy, right? Nobody owns it, and I think there's not enough emphasis on actually developing a proper positioning for a project, proper messaging, proper branding, but then taking it from there and creating demand from that and actually driving traffic, driving leads, driving appointments that convert to revenue. Right now, you've got a lot of times a way too much reliance on just having a brand. Like, oh, I have a logo and a website that looks pretty. I'm good to go. This thing's going to lease up. Like if you build it, they will come, Kevin Costner type stuff. but that's not what happens. I mean, it happens in a great market from time to time, but that's usually not what happens. And where we've had a lot of luck, and we really specialize in kind of mid-market, emerging markets developments. And so we've had a lot of success in actually being a quarterback for that strategy. And we'll still bring in like a branding agency and other sort of experts in certain areas. But really by creating that strategy of it's not just a brand is important, but it's also about how are we going to drive and create demand that's going to drive, create awareness for our target audience and bring them into our marketing funnel. How are we going to convert them to a lead in the first place? How are we going to create an appointment from that? And then how are we going to tie that in with a sales effort in the sales team or a leasing team that is deeply tied and integrated with marketing such that it's an easy transition through our funnel and it's a frictionless sort of buying or leasing experience that converts more and more buyers or tenants into the property at a faster rate.
That's great. So you don't wait till the end of construction to do lease ups, right? So when do these tend to start?
So that's another problem, actually. They start way too late. Most developers start way too late thinking about this. And understandably, like their job is generally to identify the property, and then work with architects and engineers like you guys, put together a great program, design the building, and make sure it's built and supervise construction and get it built and constructed and open. So the marketing tends to kind of fall to less importance. However, I like to say, you don't just build buildings to build them, you build them to sell them or lease them. Mm-hmm. And so it's important to bring a marketing team in as soon as possible, truthfully. And we help developers, by the way, design programs, underwrite the whole development deal with market knowledge, with our experience in terms of floor plan analysis and all that stuff.
Oh, wow. So you're assessing and providing guidance to a developer before they're even in the ground at this point. You're really partnering with them.
And that's where we love to get involved, and we love to be able to add value at that point because we can add a ton of value and help create programs that are going to deliver much better investment results.
So Boston being a tier 1 city with a ton of housing demand, we're looking at all angles, right? There's the condos, there's regular multifamily or standard There's the micro units. What kind of advice are you giving these developers that are putting in 50, 100 units in like the greater downtown Boston area, let's say even Allston, Brighton, Cambridge? What unit size is it? 2-bed, 2-bath, 2-bed, 1-bath? Is it studios? Like, does there need to be a blend? How do you think about that?
So, yeah, I would argue that it's very much market dependent and sort of micro market dependent. But that being said, there generally needs to be a mix. I mean, we've worked on successful projects that have had, way overweighted, say, studios or way overweighted 2-beds. And so there's a lot of factors that come into it. But generally you want, a typical mix of units that are going to hit the demand that's in the market, and that especially in that micro market. That also works within the program of the financial constraints of the building, how many units can you in, the density requirements, the zoning, all the underlying factors as well that provide constraints. And we try to help essentially just design the right mix. I mean, as you've seen over time, a lot of the units have gotten smaller and more efficient and things like that, which makes sense in a lot of cases. Yeah, and more amenities, amenities have become a much bigger factor, much more important, and so we help with sort of guidance through that to even make sure. And truth is, there's, as you've probably noticed in the market and seen, there's essentially an amenities war going on in a lot of ways, yes. and people are expecting these things to continue to evolve, and universities are doing it, smaller buildings are doing it, everyone's providing more amenities and trying to forecast what people are going to want to do next. And so we certainly help with all those things, analyze the market and make sure they're delivering the right amenity mix and the right unit mix. But again, it is very much market dependent in our mind. I think that's where I would actually say this is one of the where we can add a lot of value is we don't just make a blanket statement like, oh, it should be 10% studios, 50% 1-beds, 20% 2-beds. It's more like, hey, how can we position this property to attract the best tenants in the market and give them the best place to live, right? And so I think how we're looking at that is basically with our boots on the ground knowledge, our information of being, having done so many deals, leasing.
You have so many more reps. If I extract and look at this, there's a certain time, even for someone growing a business, right? Like at first you got to seek who are the people you can lean on for advice, but you're really identifying obstacles and building the expertise to learn and overcome those hurdles to build a business. At some point, you become the bottleneck, right? Like you have to start looking, how can I acquire skills and expertise into my business so we can continue our rate of growth? Like you want to stay on Inc. 5000 for the next 20 years, you're probably going to need to hire some more expertise, right? Than just putting it on your back. I think the same thing applies here. For the developer that might only do a few hundred units a year, they might not have that same intuition. They don't have the reps that your team has servicing all of these thousands of units a year. You're getting way better feedback from the market on what's actually selling, right? And it becomes this big feedback loop that you get to advise on new developments.
Yeah, then that's exactly right. And the other nice part about that is with our really local entrenchment, our local market knowledge, our local boots on the ground, and this sort of Eastern Massachusetts, Southern New Hampshire, we know who's doing what projects, we know what's happening, and we know who the buyers are, who the apartment renters are in the market, and we're not relying on software or like a Yield Star program to tell us what rent we should rent things at. We're really looking at it from our own point of view, our own expertise, and the customer feedback, the customer feedback from buyers and from tenants, not just market analytics level, but diving in deep to understand the market and really deliver, advise to create the best program, then execute and deliver on that to the market.
Yeah. And you even have the property management arm, right? You're also servicing the people that live in these buildings. So you get feedback on what's working and what's not actively, like well beyond just brokerage and sales during the lease-ups.
Exactly.
I have some insight into brokerage. I have family members that run a real estate brokerage in like a suburb of Boston, campus homes. So I understand that scaling a traditional brokerage is hard. Like your team is commission based. You need to invest in that team to help them grow and drive work. Like they could try to do it themselves and get 100% of the commission, or you as a brokerage have to create enough opportunity to attract them to be able to do some level of split that makes sense for them and makes sense for the business. Because as a business, you're pouring into these people right? So like the commission split becomes a challenging hurdle if all you do is brokerage. I imagine having these multifamily buildings really add benefit to the brokers that choose to join your team in the greater Boston area. Is that right?
Yeah. So, again, this comes down to that whole idea of the flywheel I mentioned earlier. And it's not just a flywheel for our, clients, buyers, renters. So it's really for our agents as well. And so the agents have these opportunities to, do their own business and, work with, build their own mini business within our business as an independent contractor. But they also, have the opportunity to work on projects as far as lease-ups or condo sellouts, which actually is a lot of our agents take us up on that opportunity and are really great at it, which is exciting for us again. But it also gives them, again, that base of opportunity that they would not get at other firms. That I think is a value add for us, and the truth is,
it de-risks their earning potential.
Exactly. Yeah. And the nice thing about it too, it's also a value add for our clients, like especially on the multifamily side. Whereas leasing is essentially an entry level job for most property management companies. Like their leasing people they want to grow up to be property managers, whereas our leasing people are professional salespeople. And so that's what they are. They're salespeople, and they're sort of much better at the job. They're trained to do sales and leasing, and they're much better at it. So it helps. It works with our clients. It works with our agents, and it's really a nice kind of holistic cycle there.
And even with does the property management contribute to that cycle too?
Yeah, absolutely. So I think on all aspects, what you're talking about. Yeah. Again, so the agents can do the leasing. The tenants that we're working with also, again, become buyers maybe for the other parts of our business when they're ready to leave an apartment building. So all of these things really are very well intertwined and can help us continue to scale up and grow our business. And again, I think my whole point of view there is it's not just good for us. It's good for our people, for our agents, for our employees, but also for our clients. And I think that's the key thing to building that holistic flywheel as we're trying to do.
Yeah. I love the holistic flywheel reference. And like you said, when everybody around you wins, like that's when true scale is achievable. I feel like you're always going to be fighting a headwind if your success is coming at the detriment of others around you, right? Like if they're not succeeding as much as you, but if you can create a winning situation for your team and for your clients, like the only way to go is up because you're providing value to everybody around you. That's right. Totally. I love the whole abundance mindset over scarcity, right?
100%. Totally agree. And not to get on my soapbox too much, but maybe I will for a minute. This is what is so scary for me about when you see these companies raising hundreds of millions of dollars on, like small revenue dollars, and multiples are crazy. And whether it's venture capital, in most cases, or maybe some form of private equity or whatever and it's all about, and I know it's changing a little bit now, but when it's all about scale, you're killing your people, you're creating value and wealth for the very top early shareholders, founders, but very little down the chain in the vast majority of cases. And, occasionally consumers benefit because they get basically discounted below cost, goods and services from time to time. But it's creating this sort of bifurcation in the economy that I think is really bad overall. It's just throwing off too many negative externalities versus just, building a good, strong business that is really trying to have that holistic sort of, not to use the phrase again, but the holistic flywheel that really is benefit for employees, for clients, and for the eventual for the shareholders as well.
There's definitely a dark side. There's definitely a dark side in private equity and venture capital. And as you mentioned, there's been this newfound, I would say, awareness to conscious capitalism, right? And like let's say if we'll touch on this a little bit, it's a little off topic, but I think private equity and understanding financial engineering is pertinent into like, as you're building leadership acumen, right? So the private equity world, if you call it a platform company, you buy your one company that you think has like the bones that you can build and bolt on other companies to, and then you buy bolt on acquisitions. So you might be buying businesses at a multiple of say like 3 to 7, maybe you overpay for that first platform company, you're paying 7x, and you're buying the other companies in 3 to 5x multiple of their profit. Before you know it, you do it over like a 5-year cycle. You've built this significantly larger organization that now when you go to sell it to another private equity buyer, you're selling it at a 10 to 11x multiple. But in the meantime, you've stripped a lot of the value out of the business and like kind of packaged it with a bow and moved on. So it's like hurting careers. It's hurting a lot of stuff. as you do it. It's not necessarily conscious. That's kind of the dark side of private equity. That is not all private equity, right?
Totally. Just to be clear, 100% absolutely. And I don't mean to cast an aspersion. And by the way, I'm actually talking more about some of the. I'm not even talking about private equity as much as more of the some of the crazy venture capital investments that are
totally
being made.
Different.
And when companies are competing solely on their access to capital like that, their incentives are so misaligned from actually building a good, stable, solid company, because it has to be about growth, or else those investments just don't pay themselves back. And that's what causes the big problems.
The venture capital people, they're winning, right? So a venture capital firm, they might invest in 50 early stage startups because they know if one or two win, they're going to get outsized returns. It's exponentially scaled. That's why they're using, it's typically in technology and software companies, because they're scalable well beyond their cost to scale. And so, but what's different is in the founder and the people that work at those companies is they're the 1 in 50 shot of potentially making an exit. And because they took on venture capital, it's an all or nothing play. When I think in a lot of cases, even as a software company, a startup founder, like just bootstrapping, which means you're not taking on any outsized capital, like would be far better off just building a sustainable growth company as a software. And they might still get a beautiful exit in the long term, but it's far too celebrated in today's world to take on venture capital, right? Like that's almost the holy grail, but really you just signed like I'm going to make it or break it kind of deal. And you take on a ton of pressure. You're no longer the driver of the ship.
Yeah, exactly.
So good segue into how you got into property management. And I know I'm particularly excited to learn more about your experience here. You purchased, so you guys grew through mergers and acquisitions, which is an area I love and really study. So you guys bought a property management company, correct?
Yeah, so we started doing, so let me step back even further. We basically were getting asked to do property management almost since the very beginning of the company. And we consistently just said, no, that's not what we're doing. We're focused on the brokerage side. We're focused on the brokerage side. We have more and more.
Why were you initially adverse to that?
Because I didn't think we could do a good job with it without a foundation or structure in place, or just like, yeah, sure, and so I wanted to make sure, I think, the plan was to eventually get there, but I didn't want to do it and,
Smart.
excuse my language, but fuck it up, initially, so we don't have a good long-term plan. But so eventually though, after the kind of 2008 downturn, we started like, okay, now we have to kind of accelerate this, as I said earlier. So we started taking on some clients. At property management, we started a small property management team with basically our in-house employees that we had working for us already. But I pretty quickly started looking at opportunities to acquire some other small firms, and one fell into place. Was introduced through another vendor we were working with, and some of our employees. So it was a good connection, and it worked out nicely. So we came across the seller of the property management firm we were buying was looking to retire and get out. He wanted to sort of make sure his team had continued employment, and was willing to sell the company for a very reasonable price, because he was sort of frankly more concerned about the employees and the clients than his own maximizing value. And so it just worked out really nicely. He did he did a good chunk of seller financing for us as well, which was nice. And we were able to structure the deal in a way that I think made sense for us and for him as the seller, and for and I think for the employees as well. Going forward for us as a kind of combined company.
It almost sounds too good to be true. Like what an opportunity, right? And
totally.
And kudos to you guys for building like a great business, a good brand, like clearly a team, people first type company, right? That would attract that kind of opportunity. If you're not out there doing those things, chances are that opportunity won't fall in your lap. So like, while that might have been fortunate, like you guys also put yourself in the position to see that opportunity through.
100%. I think that's where this whole concept comes back and pays itself in spades, by doing the right thing, really treating your people as well as you can. I mean, obviously we're all operating within constraints too, and nothing is ever perfect. There are always problems and challenges to overcome. So I don't want to, sit here and act like, oh yeah, we're perfect. That's not the case at all, not even close. Mm-hmm. But when you create that company and the culture, and this is one of our big goals, continue to do that, continue to improve that, and put that out there in the world, that we're someone that is attractive to people, whether they want to sell their company or whether they want to, join us as an employee. That kind of employer brand or that culture that you have out there is super important. And that's why we spend a lot of time, energy, money and investments to try to continue to and listen to our employees to kind of continue to improve our culture. And we're going to continue to try, put the word out there about all the great people we have, all the fun we have, even again, while we have lots of challenges day to day, we try to have some fun doing it and try to be supportive and build a really great culture.
An important message I try to share with the people on like the buy side, our clients, right? Or maybe people that aren't quite our clients, is learn to evaluate and really consider what are the inner workings of the company you're going to hire as a consultant or a partner in this development or whatever business that is. Because really, like, the pain points of every industry, they stem from the organizational flaws behind them. So if you find partners that are actually working on their business, they're focused on culture, they don't just have culture written on their website, right? Like the people that are actually demonstrating that they're doing the things that put their people in a position to succeed, like those are the constant learning, that the flywheel you mentioned, like those companies, it's a far greater likelihood that they're going to be successful long-term and provide value to you long-term than a company that's just bottom dollar or like isn't doing those things, because they're not a learning organization. They're not going to improve over time.
Totally. And the interesting thing is, which is probably a lesson we've more recently learned, is how important it is even from a working with client perspective to say, okay, yeah, so they're choosing us, but we're choosing them too. And to find that alignment. And to find that alignment both ways really helps unlock way more opportunity, because you can then, have honest communication, say, yeah, I know we absolutely made a mistake there, we're working to fix it, or vice versa, or here's how these results can be better next time. You can actually do a real kind of good, solid debrief of things and admit where you went wrong or where things went very well and how to do more of that. And when you have that cultural alignment, that trust, it's no different than within a team, within your own team as a company, is that client to vendor or client to partner relationship is just as important in a lot of ways. And I'm probably still late to the table on that, because when you're just starting a company or getting rolling, you're like just scrapping and clawing for any business you can get. But that has become more and more important for us moving forward.
Yeah, I think you guys have done a great job. And one last thing, I'm interested in the M&A conversation. Did you guys bring on any advisors throughout that process? I know there's an entire world of investment bankers, the attorney, the wealth manager, all of that stuff. Did they all get involved in that?
I wouldn't say all, but we definitely leaned on our attorney and our attorney's team and our accounting team for sure. Those were primarily the team members involved in the decision making.
And did you guys go through like financial due diligence or a QOE, a quality of earnings report, that type of study?
We did. We didn't do a quality of earnings report specifically, but I did a lot of due diligence with our team, and to really kind of understand and really look at this, the structure of the revenue, how we wanted to structure the deal, whether it was an asset sale or whether it was a stock sale, whether, we were, how we were absorbing the employees under what structure, all kinds of the other communication to clients, how that's going to go, how can we protect, or make sure clients aren't going to, turn over because of the sale. So there's all kinds of things to think about and look through. Part of it's diligence, part of it's even well beyond that transition as well, the sale and transaction as well of the company. So there's so many moving parts there. It's really cool though. I thought it was. I do think
you can create a lot of opportunity, right? Like having bootstrapped a company versus bought a company. There's a lot of advantages to buying an existing brand, right? It's not easy, but there are advantages.
There totally are advantages. I mean, there's challenges you got to think about as well, like you just said, but there absolutely are advantages. It has worked out well for us. We've now purchased 2 companies. What
was the second company?
Another property management company that we acquired a couple of years ago. And we're sort of actively looking for other opportunities to continue to work with or find good people who want to join our team in various sort of deal structure capacities.
And if we were to share, what type of acquisitions are you open to? Is it all property management, or would you consider other kind of brokerage firms as well?
We'd consider both of the above. Yeah, we'd be looking for both of the above, and actually some of the other services that we offer too. We're looking for acquisitions in those markets too. So things like anything around homes or landscaping, construction management, and other services that are related to our core service offerings. Now we're very much looking and open to having conversations and seeing if there's some sort of mutual
Love that.
fit. Yeah,
that's awesome.
But
so,
you know, sorry, go ahead.
No, I was going to say, coming into all this, so you've grown, small brokerage firm. You went through a big recession, one of the worst of our lifetime, probably the worst of our lifetime, and then you've grown this integrated real estate firm, all while being partners. You and PT have been together for almost 19 years. That is no easy feat. Do you have advice?
No easy
for
feat.
anyone?
Just to be clear, just so we can be clear, that is no easy feat. I hope he's watching.
No, it takes work, right? It's not just smooth sailing. 19 years with anybody is not easy. So do you have advice for those that might be seeking a partner, or maybe someone that's in a current partnership that is kind of facing a rocky road? Like, what kind of advice do you have for them to get through it? How do you navigate?
Yeah, there's rocky roads all the time, to be clear, right? There's always, maybe not always, but there's oftentimes disagreements. You conflict can be and is very healthy if done right. But what is the fundamental, most important thing is just to have that base level of trust, right? And just to know you've got each other's back. That is that's the only thing you need, and you can figure everything else out. Mm-hmm. So you've got to find a way to start from that place of trust and understand that you both have each other's backs. You may not each have the best days or years, at any given time, but to know that you both have that level of trust that you can build upon that very much so. I think to take it to the next level, then you need to work on your alignment around vision and goal setting, and understand you're both obviously on the same page where you need to take the company. Yeah, and so that sort of helps you get to the next level. But everything starts with trust. It really starts and frankly can end with trust, and you'll do just fine. But to kind of continue to scale up, it's really around that alignment and being fully clear on where you guys both want to take the company.
That advice is so great. Something you said in there that I would say is unique is recognizing that you're not going to have the perfect day or the perfect week or even the perfect year, right? And as a company grows and scales, and as you as leaders develop from a small business to a larger scaling business, your input, or I would say the output of your efforts, are less and less measurable hour by hour, day by day, and week by week, right? They're longer term growth plans. Those inputs happen for a long period of time before you might see the return on those, and starting to really gauge in trust that each other are doing their best to advance the partnership and the business is really an important piece. I think that's great.
Exactly. No, you're exactly right. And again, not everything that you do is fully tangible. Not everything that you do is, and again, I think the recognition of mistakes. I've made so many fucking mistakes all the time. And
yeah, we all do.
And to not think that someone else is going to be in the same boat is frankly silly. Again, I truthfully, my personality type is actually judgmental, and I have that sort of judgmental streak. But so I've got to really consciously say, okay, let's tone that back, because I know myself, I'm not even close to perfect, so I can't be so judgmental on other people to expect them to be perfect. Mm-hmm. So that's a challenge, and I think that's really where it comes down to kind of understanding who you are as a person and what it takes to approach various different circumstances or things. But really, though, it all comes down to just saying, hey, do we trust each other or not? And if we aren't quite there, how do we get there? Or what's the problem with that fundamentally, if there is a problem there? And that's why our relationship is great. Yeah.
Well said, Mike. What's next for Charles Gate? What do we expect from you guys over the next 5 years?
Yeah, well, we're going to continue to scale up. I think we've got really fantastic traction, especially serving that, the mid-market development size from, the $5 to $100 million developments and property management side. We've got some great traction. I think we offer a really unique level of service that is vastly underserved by other players in the market. So I think we've got a unique offering for that we're excited to continue to scale up. I think we'll continue to look for other ancillary service offerings that we can continue, as word you used before, bolt on to our services to continue to build that flywheel. We have some what I think are pretty unique and innovative ideas on the HOA side. That market that service line is a challenge, in all truth, for pretty much every provider in the market. And we've got some ideas to dramatically improve that we're kind of thinking through and strategizing about. We're not ready to unveil it yet, but that might be coming soon. And then on the brokerage side, I think we're just continuing to do what we do. We're not trying to be the biggest brokerage out there. We're trying to hire or attract agents who really want to come in, be part of a team, have unique opportunities they're not going to get elsewhere, have really good one-on-one training, and have access to the right kind of tech, not just a smorgasbord of everything, but really kind of a curated set of technology tools and training that can really help them build their businesses. And I'm excited about that as we continue to build.
That is exciting, and I've no doubt that you guys will achieve your vision. You guys are doing the right stuff, working on the business. You're leading with intent, and we might have to have you back to learn more about the HOA, the Homeowners Association, and that strategy once you guys unveil it. So we'll close out here with 2 questions I ask everybody. What's the top book you've read in 2022?
When They Win, You Win. Russell Arroway is phenomenal, and I don't know if you've
I haven't read that one. No.
Yeah, it's incredible. It's literally the only book you need to read about people management.
Love it. When you win, they win.
Yeah.
Or when they win, you win.
Sorry, when they win, you win. Yes,
yeah. All right. And
advice. There, Rens,
that was a classic flip. And do you have advice? What advice do you have for emerging leaders in development, design, and construction?
A couple of things. I think one is have a huge sense of curiosity. Always be, this term I always like to use is sort of have your head on a swivel. Like, make sure you're paying attention to the industry, what other people are doing, find learning opportunities, mentorship opportunities, and always be learning and working to improve yourself 1% sort of day over day. You're never going to get from kind of here to here and in a day or a week or a year, but over time, as you keep compounding those successes and those learning opportunities, that's really going to empower you to be a huge success. And the second point is find a great place to work where you can get some mentorship, training, support, and you're not going to be put in position to, have fire drill after fire drill, and just find that good organization where you can get that support and training and resources to help you, which is probably a shop like yours, Rens.
Those are 2 pieces of advice I can get behind. That's for sure. Like the endless curiosity to me, every time I come across a leader that impresses me, they are endlessly curious. And what it tells me is they're not stuck in their ways. They don't think they have an answer for everything. If they find something that's contrary to the way they're currently thinking, that curiosity has them asking questions instead of being confrontational to try to win the discussion rather than find the best strategy. So I love that advice. And who doesn't want to work at a place that you enjoy being at, right? When you enjoy work every day, it becomes easy, something you enjoy.
Exactly right.
Well, Mike, I've really loved learning more about your journey today. I can't wish you, PT, and everybody at Charles Gate. I wish you guys nothing but success. Thank you for joining us on the Design Development Podcast, your hub to learn direct from top performers in real estate development, design, and construction. Thanks.
Awesome, Rens. Really appreciate the conversation. It was so much fun.
Everyone, I hope you enjoyed today's conversation. Thank you so much for listening. If you found any value in this conversation, please like, share, and comment so we can get the word out to more people. It's the only way these communities grow. We're going to really change the industry. We're a growing community. Would love you to be a part of it. Please connect with us. We're going to be on all major social platforms, LinkedIn, Instagram. So all those links will be in the show notes. Enjoy the day.
I'm going to air some dirty laundry here. We had a couple of projects in New York City that had actually been approved and permitted with cross-laminated timber. And as we were beginning the shop drawing process, the authorities rescinded that. And we were left with the choice of either letting the project go and allowing someone else to do it, or working with the client and building a nail laminated timber solution.